everyone, welcome to another episode of the Mizuho Week Ahead. I am Jing Yi, market economist at Mizuho Bank. The theme for this week is Terms of Trade. Trade news hot headlines last week as Trump closed in on final tariff levels, which are due to be effective on August 8th. One notable development is that tables appear to have turned in relative favor for EM Asia countries, which were hardest hit during Liberation Day on April 2nd. EM Asia countries including Indonesia, Malaysia, Thailand, Vietnam, Taiwan, and South Korea have had their tariff rates slashed from 24 to 46% to 15 to 20% across the board. In contrast, developed economies now have a relative disadvantage, with Switzerland's tariffs increased from 31% to 39% and Canada's tariffs increased from 25% to 35%. While EU had a trade deal, the deal came with its asymmetric terms. In addition to trade developments, it was a heavy calendar week with central bank decisions and Tier 1 data releases. US GDP surprised to the upside on a steep drop in goods imports, and while the Fed held rates as widely expected, Fed Governors Waller and Bowman dissented, the first dissent by two members since 1993, and would likely be a harbinger for more diverging views within FOMC members as incoming data rolls in. Notably, Powell had retained the optionality on September decision, even as he noted that the economy was not performing as though policy rate is restrictive. But rate cut bets surged on Friday, following dismal non-farm payrolls at 73,000 against expectations of 104,000, as well as disappointing ISM manufacturing print. As of Friday's close, futures markets are pricing in more than 2 rate cuts this year compared to fewer than 2 rate cuts a day prior. Meanwhile, Bank of Japan stood pat as expected. While Bank of Japan revised FY 2025 core CPI to 2.7% from 2.2%, Governor Ueda pushed back rate hike expectations as he opined that the bank was not behind the curve. Meanwhile, Bank of Canada held policy rates at 2.75%, citing uncertainty posed by US tariffs, but kept the door open to more cuts if the economy weakens and inflation pressures stay in check. MAS sat on its hands and alluded to prior insurance moves, having eased twice earlier this year. For October, MAS may retain a dovish tilt, but this is to a fundamentally neutral stance. So, it is not a given that the MAS will ease in October. Down under, Australia inflation report affirmed the next RBA rate cut, but buoyant retail sales will mean that the calibration mantra is retained. IMF's July's World Economic Outlook broadly revised growth revisions upwards, but relief was kept at bay, with one key assumption being higher tariffs indefinitely delayed. Meanwhile, B&M cut GDP forecast to 4 to 4.8% for 2025 from 4.5 to 5.5% previously, notwithstanding Q2's GDP outrun. Over the weekend, OPEC Plus announced a further 547,000 barrels per day step up in output effective September. This move restores all of the 2.2 million barrels per day supply curbs that the OPEC had put in place since 2023, but has done it at a much faster pace than earlier imagined. Restoring more supply at prices well below fiscal break-even of $90 to $100 per barrel suggests an urgent trade-off to shore up the cartel's influence and future sway on markets, especially given risks of global demand shocks. This week, Indonesia's Q2 GDP is expected to moderate slightly, while Philippines' Q2 GDP could see slight acceleration on improved external sector. Meanwhile, RBI is expected to defer easing following the jumbo cut at the previous meeting and amid rupee and macro stability risks. Vietnam's economic activity ought to remain supported, but could see some signs of fading front-loading tailwinds. All in, disappointing US data last week may continue to pressure the dollar, but weakness could be backstopped insofar as trade terms appear to be tilting to the advantage of the US. With that, we have come to the end of this episode. For more information on the key events for the upcoming week, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you and bye-bye.